Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, if you love to trade on gold, then yes, you know it very well that right now we do not have a direction in the market. Market looks a little bit clueless, directionless. Especially positional traders and swing traders are finding it difficult to trade in this market because we do not have a trend present. So in simple words, this is a day traders market. Few days ago when gold was extremely bullish and when the gold fell, okay, it was not a day traders market. It was mostly the positional traders who made the actual money. But right now things have changed, and as a result, we also need to trade according to the market situation. That's why I always say, my dear friends, that flexibility is very important for any trader to survive in the market. Sometimes you need to be a trend trader, okay, where you are riding the trend for many days. Sometimes you need to be a scalper, sometimes you need to be a day trader. It all depends on the situation because market is so big that we cannot adjust market according to our style. We need to adjust our style according to the market. Okay, so let's look at the market. So first of all, economic calendar, we can see today we do not have any news. Tomorrow also we do not have a major news. So throughout the week you can expect the market to remain like this. Okay, so same market sentiment may prevail. Gold prices hold grounds as traders eye Fed cues. Gold edges higher, supported by Fed rate cut hopes. Gold stabilizes as investors eye Fed signals. This is the ongoing market sentiment. Okay, so you can expect the market to remain like this. So as long as market is choppy, market is sideways, swing traders, positional traders, and also overnight traders, okay, try to be on the side. Okay, just observe the market because this is a day traders market. For safety purpose, we have been looking for 40-50 pips for the last 1 or 2 days, and we can see that we are doing well. Okay, so let's get started. So today, okay, I'm going to talk about many levels. So this video may sound a little bit complicated. Okay, please do not mind. And if you're busy doing something, then please, okay, pause the video, watch the video when you get time or when you are free. Okay, not right now because the things that I'm going to explain here may sound a little bit complicated. So so first of all, let's talk about the normal levels that we discussed yesterday also. Okay, most of the levels were triggered, but some were not triggered. The non-triggered levels are still very much valid. For example, let me change the color. Okay, so the first support on the chart of gold is around 23002 2298. Okay, the level of 2300 2298 is still very much valid, and then we have the second support around 2288 These are the two levels where we can expect the market to give us a temporary bounce. Okay, so if market comes down to this level, okay, no need to wait for candle to close. Just switch to 50 minutes time frame to observe the market behavior for 10 to 14 15 seconds. Also, if you see the market is showing price action from below, you can hit the buy button. But if you see the market has come to the level with a big red candle, okay, use your common sense. No level is permanent in the market. Our capital is limited. We are traders, not gamblers. So if you see that, okay, for 15-30 seconds market is showing price action from below, you can hit the buy button. How much you can expect? The same 40 pips, because this is an uncertain market. We do not have a clear trend here. Okay, and ultimate support on the chart of gold is still around 2277 to 2280, but chances of market going to the support of 2277 2280 in absence of a news is very less. So also we are looking for two buy levels around 2298 2300 and 2290. Okay, you can also see that I have also drawn a line at 2304. Okay, 2304 is still very much valid because the level has not been triggered yet, but the problem is the market has bounced from 2307 in the morning. Market has bounced from 2307 in the morning. So next time when gold will be coming down, it may not respect 2304. And as we all know, volume and volatility of the market plays a very important role, dominant role. If you see the market is coming down, but the volume is less, then you can look for a support around this area. Or in simple words, during the US session, there is a chance that market may break 2304 because of high volume. But during the European session, Asian session, if market comes down, then you can expect 2304 to take support. So we have three levels. 2304 little unreliable, but 2300, 2298 and 2290, 2288 are, yeah, these are good levels. Okay, where you can expect a quick bounce, not a trend reversal. We are just expecting a bounce. And on top, we discussed about two levels yesterday. One is 2337 and 2347 to 2351. Okay, these are the two resistances where we are looking for a reversal, and these resistances are still very much valid. During the day, if you see gold going up, we can look for a reversal around this area. Okay, sorry, we considered this high, yeah, this high. So this has been working. So this is, you can see we have FIBO 78.6% retracement level around 2337. Okay, 2337. And we have previous price rejection around 2346, 2350, as well as it's a round number. So these are the two levels where we can look for a sell. Okay, so the levels that we discuss right now are medium risk levels, okay, where you can expect a profit of 40 or more than 40 pips, okay. But the problem is that market is not very volatile. The volume is very less, so we can also switch to a lower time frame. But the levels on the lower time frame are not very reliable, so we need to be little bit careful. Okay, so you can see I have switched to the 15 minutes time frame. Okay, 15 minutes time frame, and we are using FIBO here. So you can see when market came down, it respected the previous level. Okay, so next time, okay, when market will be coming down, okay, you can expect a bounce around, let me change that. Yes, okay, you can expect a bounce around 2314. Okay, and then 2313. These are the two levels where we can expect a bounce of 20 to 25 pips. Okay, why we are expecting? We are simply using FIBO here. Okay, you can see we have FIBO 38.2% retracement level around this area. Yes, we do have the 50 moving average, but it is a 15 minutes time frame, so not very reliable. Okay, but as a day trader or as a scalper, you can expect a quick bounce of 20 pips around this area. You can just easily see I have switched to 15 minutes time frame, and I'm just focusing on the present swing here. Okay, you can also do it in your own computer. It will be easier for you to understand. Okay, and when market will break 2316, when market will break 2316 level, you can also look for a high risk sell for 20 pips. Okay, high risk sell for 20 pips. This is a high risk zone. Okay, so buy around 2314, 2313 if you want to go for a buy for 20 pips. But and you can also look for a sell below 2316, but it is a high risky sell level. Similarly, you can also look for a sell around 2322 and 2330. These are the two levels where you can look for a sell around this area. Clear? So whatever we have discussed right now from the 15 minutes time frame are not very reliable, especially if you're a beginner. If you're new to the market, then obviously you should avoid the levels that I mentioned. You should take trades from the levels that I mentioned from the 1 hour time frame, because stability and safety is much more important, isn't it? But yes, I mentioned these levels because as a day trader, you may feel that, oh my God, Abhilash, your levels are so far away. Okay, they are not coming. They are not practical. That's why I mentioned that yes, as a day trader, we can also look for levels on lower time frame, but yes, they are a little bit riskier. Okay, because and mostly see, I'm recording the video in the Asian session. Things will change by the European session, US session. So obviously, I cannot discuss everything. Okay, I also need to consider the safety aspect of the beginners. Hopefully you guys will understand. But yes, you can look for sell position around these areas. Okay, be careful and please follow proper risk management, and especially in this type of market where we do not have a clear trend present, stop loss is extremely important with proper risk management. Okay, so that's all from my side, my dear friends. Thank you so much. Bye bye. Take care. Be careful with the high risk levels. See you tomorrow.